Hey, everybody. Happy Friday. It's Phil Hodgen, and welcome to the Hodgen Law PC International Tax Lunch. We do this almost every month on the last Friday of the month, noon Pacific time. We only adjust it if we collide with a filing deadline. Listen in online like you're doing right now, or we'll post the show later on YouTube. You can just go to our website and find the link to that, or ask Mr. YouTube in the search field and you'll find us. Anyway, this month's topic is the third episode in the series on Form 5471. And today we're going to talk about the 9 categories of Form 5471 filers. There are 5 or 9. Actually, if you want to get pedantic, and tax people like to get pedantic, don't we? There might even be 11 of these categories. And I'll tell you about that in a minute. But basically, if you look at the instructions for Form 5471, you'll see that category 5 is a thing, and category 5A is a thing, and category 5B is a thing, and category 5C is a thing. If I were put on my overly pedantic hat, I would have called them subcategories, but I don't do things around here, do I? Anyway, so we're going to talk about all of these things, and we're going to have some fun with it. So let's get going. Just to give you an update of where we are, we're at episode 3, and we're talking about, do you even have a filing requirement? We're talking about the filer. Next month, we'll talk about filing exceptions, where you sort of figure, I got to do this damn thing, but can I get it easier? Can I find an exception? Can I find where I don't have to do as much work? And that's going to be next month. And then we'll move on to more interesting things like income and damage control. Table of contents for today, the sandwich, the beginning and the end, and in the middle, we're going to talk about the 5 categories. And unlike there's no more step 1, step 2, step 3 conformity for me. No, sirree, I'm a rebel. We're going to talk about these things in 2 different sets. Ownership triggered categories, you have to file Form 5471 just because you own stock. And we're going to talk about event triggered categories. You have to file Form 5471 because something happened, an event. And I'm going to talk about it in that sequence. And you'll notice that they're all higgledy-piggledy out of order, because that seemed to me the easiest way to deal with them. And it works well with my workflow in terms of trying to solve a problem. And so I'll show you why. I hope you agree. If you don't agree, tell me an easier way to do the job, because I'm always looking for easier ways to do things. So let's start. We are talking about this item B on Form 5471, and you'll see there are 9 little check boxes, and we're going to figure out the principles, how to figure this out, and which box or boxes to check. And multiple boxes are indeed possible and in fact normal, that you're going to be checking multiple boxes. So don't just stop at the first one you got and be done with it. And why does it matter? It matters because the workload that you take on is a function of the check boxes that you put. So you check, category 3, you can see the checklist of all the schedules that you have to do, and category 4 and 5. And you can also see within categories 1 ABC and 5 ABC that each of those subcategories or categories, depending on how you want to look at them, have different filing requirements of their own. So it matters because, God forbid you forget to add a schedule and your Form 5471 is not substantially complete and the government sends you a bill for $10,000, please. So let's go back to this idea of there are 2 sets of filing requirements, categories, I should say. The ownership triggered ones and the event triggered ones. So categories 1A, B, C, category 4, categories 5A, B, C, all have a trigger based on I exist and I own enough shares. And typically the time on which you own the shares is either described as at any time during the taxable year of the foreign corporation, or it's going to be defined as I own it at any time during the tax year of the corporation plus the end of the year or the last day on which this thing is a controlled foreign corporation or things like that. So in other words, it has a time function and a I exist kind of function. And the event triggered ones, of course, you have to have some stock. You're not going to be in the game of playing Form 5471 unless there is a shareholder. So stock ownership at some point during the year is a given, but it's not the stock ownership per se that triggers the category 2 or category 3 filing requirement. It's because something happened. The person acquired stock, enough stock. The person disposed of stock, enough stock. The the foreign corporation had a reorganization, so the shareholder did nothing, but the corporation did something. And there's some other things that go on there too. So there are these I call event triggered. And I used to describe these as transaction triggered because my brain only thought about acquisition of stock or disposition of stock. Um, but that's not correct because events happen that are not acquisition or disposition of stock, like a corporate reorg, right? You go through from the beginning to the end of a corporate reorg. Your stock percentage might go up or down, but you didn't acquire any stock, right? You just, if you like some minority shareholders are squeezed out. Now you own a higher percentage of the remaining issued and outstanding stock. There was no acquisition as such, or one of the event triggering elements for categories 2 and 3. I mean, is for not category 2, but category 3 is when a non-resident becomes a resident alien for income tax purposes. And there is no acquisition. Person the day before entering the US and the day after entering the US has the same amount of stock, but there's a category 3 trigger. So I've started telling myself this word event triggered rather than transactional because it's more accurate and I'm thinking with more precision. So I encourage you to, if you don't like mine, at least aim towards precision in describing your life to yourself. So here's my handy dandy spreadsheet where, not a spreadsheet, it's a flow chart, right? I know the difference. I'm trying to figure out ways where I can solve all of my problems all at once as much as possible. So rather than picking up a job and looking at it and saying, is there a category 1 filing requirement? And I come to the bottom and I say, yep, nope. And then I pick it up again and say, oh, is there a category 4 filing requirement? And I go through all the analysis and I say, yep, nope. And then I go, I'm going to take a coffee break. And then I come back and I start from scratch on category 5. Why not try to solve all of these in sort of one flow? And so this is my flow chart for, at a high level, how to solve the ownership triggered filing requirements, categories 1, 4, and 5. So if we follow this chart, and it's at high level, it's not down to nerd like details, I will be sure that I've asked myself the right questions and come to the correct conclusions. So in my little flow chart, the little diamond shaped things are the questions I need to ask myself. And typically these are an analytical look at the code and figure out what the answer is here. Sometimes it's purely data question. The parallelogram is input data that I've previously computed somewhere else. So you'll see the third little shape down says input stock ownership of all other US shareholders. In the previous step up above this screen, I've figured out who are all the shareholders. And so I know who the other US shareholders are, so we can go down and figure CFC status. And the gray boxes here are my little explanation to myself. Where am I right now? And the little sort of pink pills, these are my reporting positions. And reporting position is a phrase that has immense and important meaning to those of us who sign tax returns. This is why I am preparing the tax return in this way. I am a category 4 filer. Boom. Okay, now I'm going to do everything that Form 5471 tells me to do for category 4. Or I am not checking the box for category 4 because I have an exception, and that's a position. By omitting something, I've taken a position on that Form 5471. So these little pink pill looking things, this is where rubber meets the road for those of us who are tax pros and tax preparers, either signing or unsigned for that matter. But we're involved in the game. So let's follow down. Above this, there are some common elements that have to happen every time. Am I a US person and all of that? And I'm going to show you that in a minute. But for categories 1, 4, and 5, it looks like a mess, but it really isn't. On the far left, you have the category 4 stuff, which is easy peasy because the first we start at the top. Let's start at the top of this screen. You start with the assumption we've already figured out that you have enough stock to be called a United States shareholder. So 10% or more. It could be up to 100, but we know that you've hit that minimum threshold. We're going to go down to the next step. And the first critical question we ask, which is going to clear category 4 off the board if we answer it no, is your stock ownership greater than 50%? If yes, you see how the arrow drops down to you control a foreign corporation. And that's the magic phrase out of Internal Revenue Code section 6038A1, which means, hey, congratulations, you have a reporting requirement. The code doesn't call it category 4, but the instructions to Form 5471 call it category 4. And so we conclude that you have a category 4 filing requirement. It exists, and you're going to solve that category 4 filing requirement either by filing as a category 4 filer or by finding and applying a filing exception, which means you don't have to do the work. So that's how the flow goes through. The center category, I won't talk you through it right now, we'll do it later, is if you just follow the line straight down from top to bottom, that's you come to the conclusion you have a category 5 filing requirement or you don't. And the category 5 filing requirement is you have to be a United States shareholder, which we figured out at the top of the screen. And you have to be a United States shareholder of a controlled foreign corporation, which is the second diamond shaped thing down the question that you ask yourself and analyze. And then on the right, this god awful mess is a consequence of the Tax Cuts and Jobs Act, which is category 1. And it operates exactly like category 5. So category 1 and category 5 are pretty much the same, except in the case of category 5, you have to have a controlled foreign corporation. In category 1, you have to have a specified foreign corporation. And there are 2 ways to become a specified foreign corporation. And that's why the flow chart gets a little bit messy there. But we'll talk about this in some more detail in a bit. For categories 2 and 3, these are the event triggered filing categories. Here they are. So here is your list. All of your hard work in your analysis and your Form 54-7 prep questionnaire and checklist is going to be in these diamond-shaped things. And you can see that the ones that are blue and red, the top 3 trigger a filing requirement both in category 2 and category 3. The bottom 3 elements are just category 3 problems. And throughout this thing, I'm going to completely ignore captive insurance company situations because Professor Pareto says don't waste time on things that don't make a difference. And for those of us that sit around here, I mean, the number of captive insurance situations that have come through in my life have been trivial, one hand. So they don't exist for me. Maybe for you it does, but if so, you know more about this than you need to know. Lucky you. So let's go to the common elements of all of the categories. Here's the top of the job. So we start and we ask, are you a US person? If you're not a US person, why are you even thinking about filing a US tax return? It was specifically Form 5471. Bang, off to the right we go. Form 5471 is not applicable because only US persons are going to file Form 5471. The next one down, Form 5471 only applies to US persons who own stock in a corporation, specifically a foreign corporation. So if this business entity you're looking at is not a corporation, it could be a trust partnership, something else. I don't know what else exists. Estate. If it's not a corporation, or to use the jargon of the code, an association taxable as a corporation, then Form 5471 doesn't apply. We have other paperwork for that, 8865 for foreign partnerships, blah, 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 blah. Now that you've figured out it's a corporation, is it a foreign corporation? And domestic corporations are not supposed to file Form 5471. I've seen it happen. Oops. But you're not supposed to file Form 5471. It's just for foreign corporations. And we'll talk about what means foreign in a few slides. And so, having gone through that, I, the taxpayer, am a US person. This is a corporation, it's a foreign corporation. Now I'm going to compute my stock ownership as a percentage in this foreign corporation and then ask myself, do I have 10% or more? If the answer is no, then I'm not a US shareholder, because a United States shareholder has to have 10% or more. Therefore, it's impossible for category 1 to apply. It's also impossible for category 5 to apply. And it's impossible for category 4 to apply, because we'll see in a bit that controlling a foreign corporation means owning more than 50%. And if I own 8%, I don't own 50 or 50, more than 50%. So impossible for category 4. So by following this process, yeah, I know your brain is going to say, oh, of course I'm a US taxpayer. Of course this is a corporation. Of course it's a foreign corporation. Just go through the methodical steps one at a time and verify it. When we come to the bottom of this, which was the top of the other slide I showed you, where we have decided that you are a United States person and your stock ownership is 10% or more in a foreign corporation. Now the fun begins. United States person. I'm just giving you the standard definition. You'll see some variations by category. I throw in these slides with words on them, mostly to give you a resource material for later, so you don't have to look up stuff, or you have to look up less stuff. So is it a corporation? Here's the way you do it. The first bullet point is plain English for, is this a per se corporation? A list of corporations is in the instructions to Form 8832. And if your entity is one of those things, it will be an association taxable as a corporation. The end, no do-overs. That's it. The second bullet point, there are a bunch of entities, foreign entities, that are not on the per se corporation list, but they are nevertheless going to be classified by default by the code and the regs as an association taxable as a corporation. And how's this going to happen? You're going to look at this corporation and you're going to look at the governing laws. And if you see that the owners, all of the owners have limited liability, the default classification of this entity is that it's going to be a corporation for US income tax purposes. You can make a check the box election to make it something else, but it's going to be by default a corporation. And therefore, until proven otherwise, you've got a 5471 problem on your hands, or at least potentially. The one thing at the bottom, I want to encourage you, please, 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 please do not get confused by the magic letters at the end of a corporate name, especially LLC. LLC has a meaning for those of us in the United States that is not the same as, let's say, in the UAE. LLC, let's just leave it at that. What I suggest you do is get a copy of the articles. You're going to need that, and I'm going to tell you why in a second, but you're going to find out from that, you're going to find out what kind of entity it is in the foreign country. And from that, you're going to ask Mr. Google, do all of the owners of this entity have limited liability? And that's how you know you're on the right place as a corporation. There are these weird entities. I think I'm going to take this slide out the next time. This has only come up a few times in my practice, where you have these weird kind of foundation-y looking things in countries that were not former colonies of the British Empire, basically, let's just say. And sometimes they kind of look amorphous. They look more like corporations than they do look like trusts. But those are the two categories that they will fall into. And I give you the citation to a memo out of the IRS about, classification. It can go either way. In general, you're going to have a pretty easy time. And in general, in my experience, you're going to say, this is really a passive trust like holding company for assets rather than a operating business kind of entity. But at the margins, I have seen things that you kind of don't know what to do about it. Um, Generally, I can't imagine a time where I've pushed it towards the active, we're going to treat this thing as a corporation. I've always treated it as a trust of some kind or another, grant or non-grant or etc. Anyway, is it a foreign corporation? Foreign just means it wasn't incorporated in the US. So if it has a federal charter, Citibank NA, like all of us are doing Citibank's tax return, right? That's a federal charter for bank. If it has the articles of incorporation say the name of one of the 50 states, it's a domestic entity. The District of Columbia is treated as a state for these purposes. So if it was on the, organized in the District of Columbia, it's also a domestic entity. And whatever is not domestic must be foreign. So the way you do it is you get a copy of the article of incorporation or whatever it happens to be called, and you look for the name of the country or governmental entity under which laws it was formed, and that's your answer. It's either domestic or foreign. So this is going to be easy, but you know what? You ask for the piece of paper from your client. Don't just take their word for it. Then the final question is how much stock do you own? We dealt a lot with that in episode 2 last month when we talked about constructive ownership of stock and stuff like that. So I'm going to assume that you've gone through the process of figuring out how much stock you own directly, indirectly, and constructively. And we are good to go at this point. So we have a percentage in our head. So now moving on to the ownership triggered categories. We're going to do 4, 5, then 1. Now you can start to see how my messy flowchart sorts itself out, and it actually kind of works kind of simply. So the orange one is category 4. We start with the stock ownership percentage of between 10 and 100% because we just did that. And we know that you're a United States shareholder of a foreign corporation. Now we go down to the first question. How much stock do you actually own? If it's more than 50%, then you are treated as if you, quotes, control, close quotes, a foreign corporation. Section 6038A1 says that and imposes the filing requirement. We conclude as a matter of tax compliance that category 4 filing requirements exist, and either you're going to file or you're going to file an exception, and either of those will extinguish the category 4 filing requirement that exists for you. If you don't own more than 50%, let's say that you came through with, on the previous page, if you had 8%, you got washed out right away, right? Because you never became a 10% threshold holder of stock. But let's say you own 30%. Look and see what happens on this flow chart. You take the orange arrow to the left, you say 30% is less than 50%. Therefore, I'm not going to follow that little path, but I'm going to go straight down because straight down tells me to proceed to the next step, because I also have to figure out if I'm a category 1 and category 5 filer. So that's how it's going to take care of itself. So, this is going to be the relatively easy one for you to figure out. And again, here are the words. So the 3 defined terms that you need to satisfy to be a category 4 filer are United States person, control, and foreign corporation. And again, what's a United States person? You'll see here the highlighted numbers, because a single definition of United States person is insufficient for purposes. We have to have a special one just for this. And here you have it. The most interesting one to me is the section 6013G or H election people, which happens from time to time for us, though typically we only use this as an offensive tool when we're doing an expatriation to modify some tax results. Otherwise, we don't we, I can't think of another time we've used it. Anyway, watch out for the fact that there are some added extra people who might be, quotes, United States persons, close quotes, for category 4 purposes. How much stock do you have to own? It's the more than 50%, and it's by voter value. Just side note on this, anytime you're doing stock computations, most of the time it's by voter value. Sometimes it's just one of those. So you have to, don't let your eyes skip over the words because you're tired and it's 4:30 and you haven't had a cup of coffee since lunchtime. Be sure that you make sure that you're using voter value or both or one, whatever one is specified. And we're going to use the standard constructive ownership rules of Section 318. And the weird thing about constructive ownership rules and Section 318 in Category 4, for me, this is just my brain problem. It's a more than 50%. So I own, let's say I own 60% of a foreign corporation and I'm married. So my wife owns more than 50% by attribution. It deeply offends common sense to have two people who each are considered as owning more than 50% of the stock. I know it's the right one analytically, but my head doesn't wrap around it. And so, what you're going to be doing in situations like that, and I've got 3 kids, and so attribution rules, of course, say each of the 3 kids are going to own the stock too. And does that mean we're going to be doing Form 5471, Category 4 times 5? The answer is no. There's some exceptions, and we'll talk about those next month. But anyway, it's just, this is a collision of hyper technical, overly anal retentive tax law with common sense and reality. And then the question of when. So you can see here that stock ownership at any moment in time during the shareholder's tax year. That's all that's required. So it's not, you don't have to do anything. You just have to exist while owning some stock. Therefore, ownership triggered filing requirement. So there's the little summary. It's pretty straightforward stuff. Control is the hard part because that requires you to do the calculations on the tax. And you've done that already. All right, let's move on to category 5. And again, you can see the messy spreadsheet, the flowchart starts to sort itself out and become rather clean and simple. Category 5 is a straight flow from the top because the category 5 filing requirement asks you, are you a United States shareholder, defined term, in a controlled foreign corporation, defined term? If yes to both of those, you are a category 5 filer. So let's see how this works. Start at the top. You are a United States shareholder because above this, previously, we calculated how much stock you own directly, indirectly, constructively. And we decided it's a number that is at least 10%. And the definition of a U.S. shareholder is you own 10% or more of the stock in a foreign corporation. So we've already got that established. So it's really just the second half of the equation. Is this a controlled foreign corporation that we care about? Well, let's proceed down the flow chart to the first little diamond. That's the bypass for category 5, for category 4. We've already done that. So you see that the little diamond there says, yeah, whether or not you're category 4 filer, proceed to the next step because we've got to check out categories 1 and 5 as well. So we're going to proceed down, and now you're going to bring in the data on stock ownership of all of the other United States shareholders in this foreign corporation. So you're going to have to know who they are and how much stock do they have. And God willing, you got access to the corporate information and the share registry, and you know who those shareholders are and whether they're United States persons or not. So we're going to take your information, you know how much stock you own, and we're going to take this information about the stock ownership of all of the other United States shareholders, and we're going to say, do all of you United States shareholders put together own more than 50% of the stock of this foreign corporation? And if the answer is yes, then we come to the conclusion that this is a foreign corporation that is a controlled foreign corporation, controlled because US people control more than 50%. At that point, we look at the reporting trigger code section 6038A4, and we say, ooh, we have a category 5 filing requirement. The code, again, doesn't call it category 5. Form 5471 instructions do, but that's where it comes from. And now our only job is to figure out which bucket we're going to put you in, category 5A, 5B, 5C, or God willing, we'll find an exception. So that's the flow for the category 5. Straightforward stuff. Here are the words defining what a controlled foreign corporation is. And you can see more than 50%, and it's by voter value. So that's, and it tells you where to look in that bottom part of the little text, where to look to define what ownership means, which is section 958. What's a United States shareholder? Again, here's the code section that tells you it's you own 10% or more by voter value. So again, now I've got the instructions in a little excerpt on the right. What's a category 5 filer? And I've got the summary on the left. Ownership. This slide's kind of redundant, so it may go in the next episode. And the when question, so just I exist while an owner. Now, this one has you own 10% or more at any time during the foreign corporation's tax year, and you own that stock on the last day of the year that the foreign corporation was a CFC. Well, okay, easy peasy, but what does that stock mean? And I'm going to leave this because it's out of today's topic, but it could mean let's say that you own 75% of the stock and I own 25% of the stock of this foreign corporation. So it's a CFC. 100% of the stock is owned by US people. Let's assume I've got a calendar year tax year, the foreign corporation has a calendar year tax year, and you do too. All right, so let's say June 30, I sell all of my stock. What happens? Do I have a category 5 filing requirement or not? Well, on the last day of the year, which the foreign corporation was a CFC, I did not own that stock. Whatever that stock is, I don't own any, so I can't have that stock. So what does that mean? Let's say I own 25%. I sell 15% to an unrelated foreign person, and I hold 10%. At the end of the year, I still own 10%. Is that enough? Does that mean some, in other words? What about if I have 25% and on June 30, I sell 24%? So I'm a 1% shareholder on the last day of the year in which the foreign corporation was a CFC. Is that enough? Like in a little itty bitty amount that I'm not a US shareholder, but I'm still a shareholder and I still have one of those shares of stock that I held at the beginning of the year or at any time during the year. Is that right? Does that trigger the category 5 for me? What happens if on June 30 I sell all 25% of my stock to a foreign person who's unrelated to all of us? And then on September 1, I change my mind and I buy 1% back from the corporation. I make a capital contribution. They issue me 1% of the stock, issued and outstanding stock. Do I own that stock on the last day of the year? I don't own the stock I had before. Now I own a little bit new stock. So anyway, I leave you this as a cliffhanger so you can be annoyed by the Internal Revenue Code. But I'm telling you that if you figure those through and you spend a few quality hours hating life by looking at the code and the regs and figuring it out, you will understand category 5 and filing requirements and ownership and more than you care to know, and you will be strong. This is going to be like going to the gym and lifting weights. All right, category 5. Let's do a detour into categories 5A, 5B, 5C. We're going to see this again in 1A, 1B, 1C, and I'm going to be really brief. And this is going to be covered in gruesome detail next month. So what happened is 2017 Tax Act. We used to have categories 1 through 5. Actually, it was 2 through 5 because one hadn't been used forever and ever. Amen. But they resurrected it because of the transition tax, and they made the transaction tax of Section 965. Now the reporting requirement is category 1. Well, the other thing that the government did in 2017 with the Tax Cuts and Jobs Act was it repealed downward attribution rule. So now downward attribution is allowed from foreign persons. And this created a reporting problem for people who became accidental US shareholders of accidental CFCs. Whereas in prior years, when Section 958B4 existed, a foreign corporation was not a controlled foreign corporation. Now, because of the application of downward attribution rules, it was a controlled foreign corporation. Hilarity ensues, and so Rev Proc 2019-40 tried to at least soften the blow of what Congress did. And so let me give you an example. What does downward attribution mean? So me, real life. I have a Schwab account. Let's say I have 100 shares of Microsoft stock in my Schwab account. This law firm is an S corporation. I own shares of this corporation. So I'm a common shareholder of Microsoft and Hodgin Law PC. The downward attribution rules, which are in Section 318A3, say that a corporation is treated as owning stock owned by its shareholders in certain circumstances. So in this circumstance, Hodgin Law PC is deemed to own 100 shares of Microsoft stock. Well, for a billion reasons, it doesn't matter at all for filing purposes. But that's how downward attribution works. That for US tax purposes, Hodgin Law is treated as owning the stock of Microsoft. Now, if I owned more than 10% of the issued and outstanding stock of Microsoft, and if Microsoft was a foreign corporation, I'd have some problems because now I would be a United States shareholder in a foreign corporation, pretending Microsoft is foreign. And now I'd have to figure out, well, I wonder if Microsoft is a controlled foreign corporation, because if so, I've got some Section 951 problems, and I've got some Section 951 Cap A problems, and I've got some data collection problems to deal with because I have a Form 5471 filing problem. So that's the arena and of how downward attribution sort of raises its ugly head. So RevProc 2019-40 understands the data collection problems that have been created by this downward attribution situation and tries to ameliorate it in some ways. So here's straight from the RevProc. It says, here you are, you're just living your life, and Section 958B4 gets repealed, and now you have to do this downward attribution thing and figure out if you're a United States shareholder of a foreign corporation. And you can see, like, if you have attributed ownership through some foreign person who also owns shares in another corporation, how will that other foreign corporation even know that you exist? How will they even know that you're legit? How do they know when they get a nice little letter from you, please give me all your financial data because I have a US tax filing requirement? How do you know that they're going to comply? Or instead of telling you to just go get stuffed, right? So to their credit, the government understands this and says, oh, this might be a problem. You might be creating Form 5471 filing requirement that's impossible to comply with. The same thing applies. You're probably unable to understand enough information so you can figure out whether it's CFC, and you're probably going to be in a position where you may not have enough information to figure out your pro rata share of foreign corporation income if you have Subpart F or you have global intangible low taxed income. So that's the problem. access to data when you're at some distance removed from the action that is in the foreign corporation. I'm not going to go through the details of how you get there, but this is the summary of where you come out when you go through the analysis that RevProc 2019-40 requires you to do. If you're lucky, down in the right-hand corner, in the turquoise little blocks, you're going to be exempt from Form 54 filing requirements entirely. If you're semi-lucky, those little yellow or goldenrod or whatever they are, you're going to have a reduced filing requirement. You're not going to have to file all of the schedules that Category 5 normally requires, or Category 1. And if you're in the white box, this is just the catch-all that if you can't slot yourself anywhere else, you're going to be Category 5A or 1A. So that's how it's going to come out. And you can see that the two things you have to figure out is, are you dealing with a quotes foreign controlled CFC or specified foreign corporation for Category 1? And are you related or unrelated to the foreign corporation? And so those are the toggles that toggle you to more or less or none filing requirements. So foreign controlled corporation is a kind of interesting thing. They said, yeah, you know what? Apply the attribution rules the way it is now after the Tax Cut and Jobs Act with downward attribution for foreign people, and apply it the way it used to be without downward attribution from foreign persons. And if you find out that it's only a controlled foreign corporation because of the new way the law reads, then it's a foreign controlled CFC or specified foreign corporation. And the implication of that is you don't really have control in any practical sense. And so you're kind of at the mercy of either your common shareholder or the foreign corporation itself as to whether you can get the data or not. And you're going to expect that the reporting requirements are a little bit looser than otherwise. And then similarly, the other one, the related question. If you just think about the way that the tax code deals with related parties generally, there must be some sort of kind of secret handshake behind the back where you're trying to screw the tax system, if you're parent child or spouses or stuff like that. And so there's a well-defined concept in the tax law that if you're related parties, things are different. And it's the same situation here. The RevProc assumes that if you are related, as they define related, then you probably have an easier practical leverage to get data out of this foreign corporation to satisfy your 5471 filing requirements. And if you are unrelated, you're going to have a hard time, and it's just going to be blessings from God if you actually get financial data from this foreign corporation, or who are the other shareholders, et cetera, et cetera. So these are the toggle, and you just look behind what's the principle here, and you can see kind of which way the ball rolls downhill. So that's 5A, 5B, 5C. And again, cliffhanger, sign up next month, and we'll talk about RevProc 2019-40. True confession, it probably took me 10 or 15 hours of reading it and playing with it until I finally understood it. So it takes what it takes. And hopefully, if I can explain it to you, I can cut some of that time off. Category 1. Let's go into Category 1. Category 1 is very similar to Category 5, but it's just specialized for Section 965, the transition tax. Incidentally, the United States Supreme Court has accepted a case for cert where they will hear about the constitutionality of the Section 965 transition tax. Is it valid or not according to the U.S. Constitution? Who the hell knows? Well, the Supreme Court knows because, as they say, ultimate truth is defined as a 5-4 opinion from the United States Supreme Court. We'll find out at some point. The big problem here is, you think about people who paid, the transition tax 2017, 2018. If the taxes turned out to be unconstitutional at the Supreme Court level, how are you going to get a refund? Interesting question, huh? Anyway, so you're a U.S. shareholder. That means 10% or more. of a specified foreign corporation. What's a specified foreign corporation? Two things. One, a controlled foreign corporation. So think about this seriously because you got, oh, shit. Sorry, I'm not supposed to swear for CalCPA. Um, so you have a corporation that's a controlled foreign corporation. This means that if you have a category 5 problem, you always have a potential category 1 problem. So watch for that. There's an immediate also, and in addition to, you got to watch 1 and 5 going together. The second way is if you have a foreign corporation and you're a US shareholder, so you have 10% or more, but there is another US shareholder, or maybe it's you, that's a United States corporation, a domestic corporation. So, me, 10% shareholder as a human being, and a Delaware corporation owned by my best buddy that has 10% of the stock. Okay, we're a specified foreign corporation because there is a domestic corporation that's a United States shareholder. So let's look at untangling the mess of qualifying you as a category 1 filer under both of these scenarios. The first scenario is we're looking at you are a category 1 filer because this corporation is a controlled foreign corporation and therefore it is a Section 965 specified foreign corporation. So we start at the top again, with your assumption you own 10% or more, so you're a United States shareholder. The first diamond question, we don't care anymore because category 4 has been solved. Next, we go down and we get all the data on all the other United States shareholders. And we drop down again and we say, all right, do these US shareholders own more than 50% of the stock? We conclude yes. And so we conclude the foreign corporation is a controlled foreign corporation. Then the little jog to the right, we say a controlled foreign corporation is always a specified foreign corporation as defined in Section 965. And therefore, your status as a legal conclusion at the end of all your analysis is you are a United States shareholder of a Section 965 specified foreign corporation, which is the phrase that the instructions use. And therefore, you have a category 1 filing requirement. And now we'll just go through the 1A, B, C, or exception game. So that's the first way you can go. Foreign corporation is controlled foreign corporation. And because it's a controlled foreign corporation, it's a specified foreign corporation. The second way is a corporation that is not a CFC can also be a specified foreign corporation for Section 965. So let's see how this goes. We start at the top again, figure out you're a US shareholder. We ignore the first question because we've already solved category 4. We come down, we collect all the data on all of the other shareholders. And this time, instead of caring so much about collectively how much do all the US shareholders own, we're just asking over to the far right, is one of these US shareholders a domestic corporation? If yes, then we have satisfied that second definition of specified foreign corporation, which says a foreign corporation is a specified foreign corporation if it has a domestic corporation as a US shareholder. And therefore, we come down and again, there is a satisfaction of the element. You are a US shareholder, and we figured that you have 10% or more of a Section 965 specified foreign corporation. And we figured that out because we've identified at least one domestic corporation that is a United States shareholder, meaning 10% or more in this foreign corporation. Therefore, category 1 and ABC or exception. All right. Again, we go through the categories of the ABC stuff. There is an exception here, and I want to highlight this. You think, oh, Jesus, I'm going to be doing category 1 and category 5 forever. Well, no. As soon as you wash out all of the Section 965 E and P, you're done with category 1. So this is your hope. Eventually it'll get done, and you won't have to worry about category 1 filing anymore. And again, this is the same 2x2 matrix that you saw before, nothing new. So again, the same ideas apply for category one. All right, let's wrap up in the last 10 minutes with the event triggered filing requirements, categories 2 and 3. Start with 2. Category 2 is for a U.S. individual who is an officer or director of a foreign corporation. And that person, the officer or director, is a category 2 filer for 3 situations: an acquisition of stock where the shareholder, who is a U.S. person, for the first time reached cumulative share ownership of 10% or more. In other words, they hit the U.S. shareholder level. So if you, and you can do it in multiple little bites. So I can buy 3% this year, no reporting. 3% next year, no reporting. I'm up to 6. I'm going to buy 7% the following year. It takes me up to 13. Now, for the first time, that's the acquisition that took me from 6 to 13 that has to be reported by a U.S. officer or director of that foreign corporation. So you see that. Subsequent acquisitions in 10% clicks. So let's say my first acquisition that pushed me over the threshold took me to 13%. Now the U.S. shareholder has to report every time I hit 23, 33, 43, 53, like that. Captive insurance company situations, I got that there just as a bookmark so you don't forget about it in case it matters to you. So important thing to watch. The only thing that matters for a U.S. person who is an officer or director is acquisitions, and acquisitions of the right amount that push you over the right thresholds. Who are officers and directors? U.S. citizens or residents. Implication, only humans, right? So if you have corporate director, doesn't apply. Okay, and what happens? A U.S. person acquires stock, ignoring the captive insurance stuff. And note that this is any foreign corporation. It doesn't mean a controlled foreign corporation. What makes you an officer and director? I don't know. You have a situation where you have somebody with a title but functionally no power. In reality, that's hard to say, right? What about if you have somebody with a title like the one I made up at the bottom, but has immense power? Instead of just power to staple pieces of paper together, they have the power to do anything they want. Is that person an officer? I kind of think the title matters less than the power. As a legal matter, does this person wield a club and make things happen the way they want to make it happen? That's what I would treat as an officer. Director seems to be pretty self-evident because all corporations have boards of directors. Again, the U.S. person, this is the person who's acquiring stock, has these 3 additional elements in addition to the normal definition of what's a U.S. person. Category 3. Category 2 is relatively easy, relatively limited in scope. Category 3 has more stuff going on. So the Category 3 filer is a U.S. person. We have the same modified definition, and an event occurs or a situation exists, however you want to call it. Acquisitions, dispositions, reorgs, immigration to the United States, and of course, the ever lovely captive insurance company situation. U.S. person, again, same thing. We have the normal definition out of section 7701, plus these 3 added extra bonus ones. The triggering events here are the 6. So what's important here is this same idea of acquisition, and the thresholds. The first acquisition that pushes you above the 10% mark, that's the one that you as the shareholder have to report as category 3. And then again, in subsequent acquisitions in 10% clicks, bing, 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 you're going to be reporting those acquisitions that push you from 13 to 23 to 33, and those are your thresholds. Non-resident becoming a U.S. person. This is, shall we say, an event honored in the breach many, many times. And so If you are coming across a tax return that you're doing for the first time, where someone is going from 1040 NR territory to 1040 territory, put this on your checklist. Um, Reorgs. So if the corporation reorgs and you're a US shareholder, even if nothing happens to your stock ownership, you have a reporting requirement. And then the disposition, you don't have, you know, how acquisitions you report up the ladder every 10 clicks. For dispositions, they don't care as you're going down the ladder and disposing of shares until you drop below the 10%, which magically, coincidentally, not so coincidentally, coincides with you cease to be a United States shareholder anymore. So, you know, little idea. These are the ones in my experience that kind of are not top of mind and really should be on your checklist. I mean, watching for acquisition of stock by non-resident alien family members. So if the constructive ownership rules make you be treated as if you were the acquirer of those shares, you're married, your non-resident alien spouse buys 50% of the stock of a foreign corporation. Attribution rules say you've got a filing requirement unless you can find an exception. Check the box election. That there is no more corporation. So that's a disposition of all your stock. You now own something else. You own the membership interests of a disregarded entity or partnership interest in a foreign partnership or something, but you don't own stock anymore. Category 3, non-resident alien to resident alien status. Yeah, again, this happens. Another one that I've seen multiple times. U.S. person marries a non-resident alien who already owns stock of a foreign corporation. Is that an acquisition? I mean, it's a fair question. Maybe yeah, maybe no, but just depends on your Dirty Harry theory of tax compliance. Do you feel lucky, punk? It doesn't hurt to flag this if you feel like you just want to make sure that you're okay. Reorgs and stock redemptions and all of that sort of stuff. You just have to watch out for those happening at the corporate side instead of just focusing all of your attention and love on the taxpayer/shareholder. Anyway, here we are at the conclusion. So most of the work happens when you figured out the stock ownership and the attributed ownership and constructive and indirect and all that fun stuff. So you're going to need that to check the right box at item B. And for the ownership categories 1, 4, 5, all of the answers that you need are going to be derived from those calculations that you did, figuring out the share ownership. For the event triggered ones, you're going to have dive deeper. So take that page that I have with the 6 different categories of things that exist or happen for category 2 and category 3, and add whatever kind of questions you want to your Form 5471 checklist. At least a probe for, did anything happen, right? Did a reorg happen? You know, even an F reorg. We moved it from Hong Kong to Singapore, something like that. You got to know these things. Otherwise, that's it for this month. Next month, we're going to deal, as I said, with reduced filing requirements. I don't have to file as much. Or eliminated filing requirements. Hey, presto, there's an exception to filing, and I don't have to check that box after all. And we'll wrap that up, and that'll be the final episode on the filer. And in episode 5, we will launch into Subpart F income. Anyway, that's it. Have a happy weekend. Hope you're having a long weekend for the 4th of July, and see you next month. Bye.